Hello and welcome to Graceful Retirement, where we learn calm ways to grow and protect our financial life. Today's lesson will explore how real assets such as real estate and gold can contribute to a peaceful retirement foundation. We often hear about stocks and bonds, but today we look at something a little different. Real assets are things you can see or touch, like property or precious metals. They bring a sense of solidity, a tangible base beneath financial dreams. Let us begin by imagining a sturdy oak tree planted on solid ground. The roots go deep and the branches reach upwards slowly but steadily. That oak tree is like a real asset in your retirement garden. It may not grow as fast as some flashy plant, but it offers shade and comfort over time. Now, what do we mean by real estate in this context? Real estate means land or property where you own rights or potential income. That might be a modest rental cottage, a small apartment, or a piece of land you hold for future use. When you own such property, you have a physical asset and the option to generate income or benefit from appreciation. Now let's think about gold or other precious metals. Gold has been valued across centuries and across cultures. It does not produce cash flow like a property does, but it can act as a buffer, a quiet anchor when markets wobble. Using real assets is not about chasing rapid gains or speculative flips. It is about building structural stability and peace of mind. In this way, it complements your other financial tools like savings or index funds. Let's explore 3 reasons why real assets deserve attention in a calm retirement mindset. Reason 1. Physical presence offers psychological comfort. When you walk into your own property, see the gears turning or hold a metal coin in your hand, you feel connection. That connection often leads to calmer decisions rather than reacting to market noise. Reason 2. Diversification beyond financial securities. If stocks dip or interest rates shift rapidly, real assets often behave differently. They may still face risks, but their risks are less tied to digital ticker symbols and more to real-world use and demand. Reason 3. Potential for tangible income or value retention. A rental property may provide monthly income and a metal held in safe storage may preserve purchasing power over decades. Let's illustrate with an example that remains gentle and realistic. Imagine you own a small apartment you rent to a long-term tenant. Each month you receive rent. You maintain the property and you feel a sense of contribution to community as well as income. At the same time, you own a small allocation of gold coins stored in a secure vault. Although the coins do not pay rent, you know they exist as a reserve of value when other things shift. This combined approach gives you both monthly rhythm and long-term anchoring. Now, we must also understand the trade-offs in real assets gently and clearly. Real assets require maintenance, oversight, and costs that stocks may not demand. Properties may need repairs, taxes, insurance, and tenant care. Gold must be securely stored, insured, and periodically checked. The point is not to avoid real assets, but to approach them with realistic calm. Another trade-off is liquidity. Real assets are not always quick to buy or sell. If you need cash next week, you may find delays or transaction costs. In our calm retirement plan, we accept that some assets are less liquid, and that's okay, because the trade-off is stability rather than speed. Now let's shift to how you might incorporate real assets into your retirement planning gently. First, evaluate your comfort zone and capacity. What amount of capital are you willing to commit to a physical asset? Don't leap impulsively. Choose an asset and scale you can manage with ease. Second, mix your real asset with other asset types so that you are not overly exposed to one modality. For example, you might allocate 10 to 20% of your stable base to real assets, while keeping other portions in more liquid vehicles. Third, Choose simplicity and clarity. A single well-located property or a recognized gold certificate may be wiser than many complex, smaller pieces. Simplicity supports calm management and fewer surprises. Fourth, schedule regular reviews but don't obsess daily performance. Perhaps twice a year you check on your property condition and storage of your gold, rather than every week refreshing market news. Let's pause now and reflect on recent trends that support a thoughtful interest in real assets. In today's environment, many traditional safe-rate assets like bank deposits offer modest returns. Inflation pressures and slower growth make simply saving at interest challenging. Thus, some retirees are exploring real assets as part of their broader structure to maintain purchasing power and rhythm. Meanwhile, property markets in some regions have cooled slightly, offering entry opportunities for careful buyers. At the same time, gold has seen renewed interest as a hedge against uncertainty and currency shifts. These are not speculative signals, but gentle nudges to consider real assets as part of your foundation. Again, this is not about speculating wildly but about conscious inclusion. Let's draw another metaphor for clarity. Think of your retirement portfolio as a home built on rock rather than sand. Stocks and bonds are useful panels, plumbing and wiring inside the house. Real assets like property and gold are the foundation and walls, the parts you literally rest on. If you build on shifting sand, the house may seem fine in good weather but might tremble in storms. If you build on rock, you sleep easier, knowing you have substance beneath you. That doesn't mean the storm never comes, but you feel steadier when it does. Now, as we near our conclusion, let's bring out the actionable steps you might take this week. Action 1. Review your current asset mix and ask yourself if you have a tangible component in your safe base. Action 2. Research one property or tangible asset within your means and comfort level. Just one, not many. Action 3. Set a timeline. Maybe within 6 months you visit a property or open an account for precious metal storage. Action 4. Ensure you understand the costs, from maintenance to storage fees, before committing. Action 5. Schedule a calm check-in. Mark in your calendar for 6 to 12 months ahead a gentle review of how this fits your life. Now let's summarize the key ideas of today's lesson. Real assets provide tangible presence, diversification, and non-ticker-based value. They require more hands-on attention but can reward you with peace of mind and steady foundation. Include them patiently, scale them sensibly, and review them gently. Continue your other assets, liquid savings, growth vehicles, income streams, so that real assets complement the whole. When you align your portfolio with your life rhythm, you create calm, not chaos. In closing, let's reflect on a proverb to anchor our mindset. As the proverb says, well-built houses last through storms. This means that when you build your financial home on strong foundations, you'll endure challenges with grace. You are not aiming for rapid escalation but for lasting support and security. Thank you for joining this chapter of Graceful Retirement. May you feel the solid ground beneath your finances, the gentle walls around your plans, and the open roof over your future. Until our next session, rest in the quiet strength of your foundations.